just went to work every day, you weren't thinking about the 3,000, but you were doing the same action repetitively. Well, building wealth is the same way. And the thing is that when you do that, when you pay your bills repetitively, you're building wealth for some other party by giving them a repetitive amount of money over a long period of time. So you're paying your cell phone bill every single month. And over time, as they consistently receive your payments on time every month because you want to keep your credit score good, what you're doing is you're paying them an annuity. You are basically their bank. You are their cash flow stream. In case you don't know how Wall Street works, one of the sinister things about Wall Street is Wall Street tends to look at everything mathematically and they look at everybody in terms of a revenue stream. So, for example, they have these things out right now called zombie loans. And zombie loans are basically from the financial crisis in these what they call 80/20 loans, where people would get loans for, they would buy houses in the 2000s and they would borrow 80% of the loan value. Then they borrow the last 20% to make the down payment. Well, when the home values collapse, a lot of these 20% loans ended up getting written off and they were kind of forgiven. I forgot what the term that was that they used, but the company would send them a note and say that the loan's forgiven or the loan is, it wasn't forgiven. Maybe it was another term. I can't remember. But anyway, what was crazy was that somehow, still trying to figure it out. I gotta go look it up. But somehow, like 15 years later, when people stayed in their house thinking that the house was paid off, and the equity value goes way, way up. So now that $300,000 house is worth 600,000, they're coming back. They're getting these old dead loans, and they've sold these loans to these other banks, and these other banks or these other companies are collecting on these loans. And it's not just, and here's the thing, it's not the same loan that you saw before. The original loan might have been 20,000, but the new loan comes back with all kinds of interest and fees and penalties on it. So it's almost like the word zombie is kind of perfect because you imagine somebody like when they're alive and healthy, they're like a healthy, clean person. But imagine they come back as a zombie. They're gonna have like maggots coming out their eyes and dirt on their face and all slimy, right? And so when the loan comes back, the loan is like a zombie because it's got all this fungus that's grown on it in the form of interest and penalties and fees to the point where you don't recognize it anymore, right? So that original 20,000 that was allegedly written off comes back as a $70,000 loan that they have to repay, and then people get locked in. And what they do is they threaten you. They say, "Look, if you don't pay this loan, we're going to take your house." And so people will sign a document to get on a payment plan to pay this massive amount of debt. And so then they can package all these loans and sell them on Wall Street. That's what their goal is like. Look, we just want to get you on a payment plan so we can then package your loan with thousands of others, sell them to Wall Street, and then we're selling cash flow to Wall Street, and they'll pay good money for that. And that's how they make their return on investment. So they look at payment streams, whether it's a cell phone provider or somebody paying their mortgage or whatever, they look at that as nothing more than cash flow streams, and those can be priced in various asset pricing models, and that's how Wall Streeters decide how to pass money around and pass assets around. And unfortunately, when you're talking about something like somebody's house, it's a very sensitive thing because it's where people live, right?